It was property first. Now it appears to be precious metals. And at some point, I think it could be Bitcoin. So when gold is booming like this and Bitcoin isn't, it's quite natural to think, has Bitcoin actually failed? Instead, I'd be asking, is gold really the new gold? Or is Bitcoin just waiting for its turn at the altar? Always the bridesmaid, never the gold. For those that don't know me, my name is Darcy Ungaro. I'm a financial advisor here in New Zealand, and I work with investors who want to think a little bit deeper about how money actually works, especially when the story gets messy, political, and a little bit uncomfortable, because the more we can understand how that future works, the more we can allocate our money appropriately. Today, I want to talk through gold and Bitcoin and this idea that the debasement trade is moving through different asset classes over time. We'll zoom out a little bit, we'll bring in a little bit of geopolitics, and then land on what you can actually do as a Kiwi with a mortgage, a Kiwi saver plan, and a brain. Let's get started. Now, let me start with why this feels so confusing right now when you try to understand where Bitcoin is, what's pushing that around, and where gold and silver is, what's pushing that around. On one side, you've got the digital gold crowd saying that Bitcoin is the base layer of a new hyper-Bitcoinized financial system. On the other side, though, you've got gold bugs like Peter Schiff, who've been right lately. Gold is ripping right now while Bitcoin chops sideways and scares the fiat tourists. And then in the middle, you've got a whole pack of very smart people pretending they can draw a straight line between central bank policy, the man in orange, geopolitics, and the price chart of two assets that I think don't even trade on the same emotional time frame or universe for that matter. And here's the uncomfortable reality that is so hard for us to actually see. We're trying to measure everything from inside a broken system. And that, by the way, is a bit of a butchered quote from Jeff Booth, who wrote a really good book called The Price of Tomorrow. So when we open our banking apps, right, we open up our trading apps or look at our investment accounts, we look at everything through dollars, and we judge the performance through a fiat currency lens. Fiat currency, by the way, is just money that we use that governments and central banks can literally print out of thin air. Most currencies will lose between 1% to 3% each year in most Western nations, as they have done for about 55 years now. So if we assume that this fiat currency is a lens that's fixed and neutral, it distorts everything that we're trying to measure. The ruler, if you like, is shrinking while we argue about which skyscraper in the distance is taller. So when people ask, has Bitcoin failed as a hedge, or is gold the only safe haven left? What they're actually asking is a good question with the wrong measuring stick. So here's how I see it. Over the past decade, the debasement trade has rolled through different asset classes. And in New Zealand, it was residential property that was the first to really see it, especially from around 2005 onwards. Cheap money, moral hazard, political incentives, house prices were the pressure valve for currency debasement. That's where money went because there was no other place where Kiwis trusted it to go where it would be safe. We didn't just hedge inflation, we just bought more houses. And now we're watching precious metals have their moment in the sun, gold especially. And it's the first thing people will reach for when the world feels unstable because it's the asset that your grandparents understood the best. You don't need a white paper to get a gold bar after all. You don't really need to think too much about what it is supposed to do and how to store it. But at some point, and I'm not arrogant enough to tell you the exact month, hour, day, or even year, but Bitcoin will get its turn again. Not as a hype trade, not as a tech stock with a token, but as a savings technology in a digital world. And now that doesn't mean that gold was wrong. It just means that the debasement wave doesn't hit every shoreline at once. Both gold and Bitcoin can be right, but on different timelines, maybe in different universes as well, and with different crowds under different political regimes even. Now, if that all feels too simple, perfect, because that is way too simple. Reality is way more complex. Geopolitics, for example, what we know about the world is always secondhand, always through media, always through a bias. We don't really know what's going on in the world right now. And we're also relying on legacy systems that we've trusted forever. We've become accustomed to how things work, and we can't really assess how technology will change things and how demographics will change things. Now you mash that all together, and no wonder people are getting confused right now and reaching for gold. Nobody, no matter how many X threads they write, has really fully mapped this out. If you're trying to understand this moment from inside the fiat-based financial system, you're always going to feel like you're going crazy. You're pricing everything in a unit which is deliberately unstable, and then you're trying to make rational, long-term decisions based on that. So if you're deep into Bitcoin, it's easy. You probably know what I'm talking about here. And you also believe that Bitcoin is digital gold, and it's the base layer of a new system which is so much better that given a long enough time frame, people will naturally choose that over the system which is currently dying. It's basically the savings account for the digital world yet to come. But here's the catch. The majority of the capital in the world is not in that headspace yet. The big money still thinks in fiat, in bonds, in GDP per capita, and in the old mental model of Keynesian economics. So for now, you've almost got two worlds that you need to assess at the same time. One world says Bitcoin is a savings technology and it's the future base layer of a decentralized financial system. The other world says Bitcoin is a spicy risk asset, highly correlated to tech stocks, and it might be useful one day, but I'll reach for gold thanks when I'm really scared. And these two worlds are colliding inside the same price chart right now. The real question we should be asking is, does the next system go more analog, like gold, commodities, hard assets, and more Eastern-led? Or does it go more digital? If you buy into the America versus China or the East and the West narrative, gold probably has a bigger role to play, especially if the East wins. If the US and the digitization of value win, well then Bitcoin has the wind at its back. That's the real game playing out behind the green and the red candles that you look at in the price charts. But here's where normal investors, when they're partaking in gold, silver, and Bitcoin, normally get tripped up. They zoom in too close and they end up staring at 4-hour charts, getting introspective, and freezing due to analysis paralysis. Everything looks bumpy when you zoom in too close. You start trying to game the 4-year Bitcoin cycle or pick the exact top in gold, and then you're thinking, well, I'm going to rotate between them like I'm running a hedge fund out of my living room, right? Most of my clients, though, who own Bitcoin went through the same pattern. I know I went through the same pattern. At first, I tried to trade it, sometimes with leverage. Then I chased other coins, other crypto assets, because I thought this one looks better and it's moving a bit faster. And then finally, we all lost money. Then eventually, we all crawled back to Bitcoin. Now, hopefully in the process, we also had a diversified portfolio of traditional investments, property and precious metals included. The ones who are calm today aren't the ones who nailed the timing. They're the ones who got the allocation right and then stopped trying to be clever. They own the property, they own the gold, they own the Bitcoin. They're not trying to predict each move. They're just positioning for the world that they think is most likely. And it reminds me of what a great investor told me once, years ago. Investing is really simple. Just shut up and buy cheap stocks. Different world though, different time, different asset class, but the same point. Price is only a big deal when you haven't properly allocated yet. Once you've actually built your buckets, price becomes noise. The job shifts from prediction to patience. So, how do I actually see gold versus Bitcoin? Well, in short, I don't see it as a competition at all. Gold is for the generation of old money, and it's the first asset that people will reach for in times of uncertainty because that's what they know. But it's also a hedge if the world turns back to a more analog, commodity-anchored system, probably with more weight on the Eastern countries. Think BRICS, Brazil, Russia, India, China, and South Africa, where they're always talking about some sort of resource-backed currency and trade blocks, that sort of thing. But you don't have to pick a cult here. You don't have to be an extremist to understand the extreme narratives around gold or Bitcoin. You just have to be honest about the world that you think you are going to be living in the future and that your kids are going to be growing up in. And I actually think deep down, a lot of us would love to know the true identity of Satoshi Nakamoto and would love to know just who the men are behind the green curtain that are controlling the actual price of paper gold, right? And if it were obvious, by the way, and everyone agreed on whatever the script was, the prices would be so much higher than they are today. So this uncertainty, if you like, is a gift. It's the opportunity to get in while nobody in the mainstream world has really yet figured it out. So what do you actually do with all this information, right? Well, for me, it's never really been about either or. It's always been about as well as. I've gone about my investing building concentrated buckets of very diverse forms of wealth, shares in companies, property, the stuff that's always worked in the old system. And then on the other side, I'll have an allocation to precious metals, gold and silver, covering the risk that we go back to a quasi-analog commodity-backed currency, perhaps. And then Bitcoin, covering the risk that we go full digital and some sort of Western alliance with information-driven money is the new base layer of a new financial system. You do you, but what I've found is that instead of diversification, where you just diversify a whole bunch of stuff that's denominated in fiat currency, I call it diverse centration, where I put different pots of money in very different types of investments, and some of them being alternative forms of money themselves. Everyday investors should right-size their allocation to whatever they invest in, though, according to the future that they actually believe is coming. Not the one that they wish was coming, and not the one that wins political arguments on social media, but the future that actually will have to happen. But here's the big behavioral piece that I really want to get this across, especially if you're just getting started. Don't try and figure out which one is best, and don't try and be too smart about timing. Just own both, and maybe occasionally rebalance according to the percentages that you started off deciding on. Don't treat them like trading instruments. Bitcoin especially. It's a form of money, right? And I'm not going to give you personal financial advice here, by the way. I'm just giving you savings advice. Just think in decades when it comes to Bitcoin and gold. Don't think in election cycles, and don't think according to the current events that are happening with Iran and the US and the South China Seas. It's not worth it. Change is changing, though. And I think the only thing that I'd be worried about right now, to be honest, is not just getting it wrong in terms of how that change is rolling out, but what matters is whether you're too anchored to the old world emotionally, whether you're noticing the new world that's actually quietly being built around you. You can look at all the things wrong in the world, all the things breaking and all the scary things, or you can look at where solid new things are being built, where there's hope, where there's optimism. Light always wins, right? So here's where I want to leave you. Gold might be winning the battle right now. Bitcoin might look like the bridesmaid, but the war is about something much, much bigger. And as it relates to your wealth, this is all about what kind of monetary world your kids will grow up in and you will retire and die in. Collectivist or individualistic, centrally controlled or more self-sovereign. Now in 20 years' time, not 2, not 3 or 5, you will look back at today's portfolio and balance sheet, and you will judge, or your children will judge, the choices that you made. You do not have to be an extremist to understand some of these extreme views. You don't have to go all in on gold or on Bitcoin either, but you do have to ask yourself a really honest question. Am I currently allocated in a way that matches the world that I actually see coming right now, or just the world that I'm hopeful for or nostalgic for? But at a personal level, if you're wondering how this all fits into your own portfolio, whether it's your portfolio that you manage or an investment portfolio that an advisor manages for you, or even your Kiwi saver, then reach out. There's a free 15-minute discovery call in the notes where you can learn a little bit more how I work. And before you watch the next video, just let me know what you think in the comments. Who do you think wins this battle? Is it going to be gold or is it going to be Bitcoin? Or are we all still kind of guessing from inside a broken system? Who knows? Till then, we'll catch you on the next one.
A special thank you to our show partners who help make this possible. Thank you so much, you're awesome.
SwiftX
And Provincia, thank you again. Want to connect on social media? You can find me on X and you can find me on LinkedIn. Remember, some investment strategies or ideas can make you obscenely wealthy or wipe you out completely. It's hard to know from this and what's best for your world. So if you can, reach out for some advice that accounts for your own circumstances. That's it for this one. Catch you next time. I'm out.